What does it take to succeed in multifamily? Well, in today's episode with Khleif, we're going to be diving in to some great lessons about specifically how you can take action to get started in this business as a passive investor, as an active investor, and some lessons that'll help you get started today. Let's get into it. This is the Investor Mindset Podcast. Let me ask you something. Are you hitting success yet you know that there's another level? Or perhaps you're just getting started. You're trying to put all these pieces together, get your first deal, but something's holding you back. Or maybe you're going through a big change in your career and your life, but for some reason you just can't take the steps you need to know in order to move forward. Well, I've been having a lot of really incredible conversations with people who are in the exact same position as you are, and they've been able to make massive change happen very quickly. Whether that's doubling your income within just a few months, whether that's making some kind of big shift in your life and really unlocking that vision, or perhaps it's just getting clear on what that vision needs to be so that you can really take those steps. Of course, you guys know me, host of the Investor Mindset here, Stephen Pesavento, and high performance coach. I've been working with clients for years, seeing and helping them see major results. And I'd love to set up a call to discover if it's possible to be able to help you with some of those same things. If you are in a position where you want more and you're committed to taking some steps to get there, then I encourage you to head over to investormindset.com/discover and let me know a little bit more information about you. Set up a call and we'll jump on and we'll walk through a discovery process. Totally complimentary. You'll walk away with a lot of clarity. And if there's some way that I can help serve you, I'll let you know that too. So you can just head over to investormindset.com/discover. And I look forward to seeing you there. All right, guys, welcome back to the Investor Mindset Podcast. I'm your host, Stephen Pesavento. And today we have a very special guest, Khleif's in the studio. How are you doing today, Rod?
It's a beautiful day, my friend. Let's have some fun.
It's going to be a lot of fun. And as you guys know, Khleif is an entrepreneur, real estate investor, author, mentor, and the host of top-ranked the Lifetime Cashflow podcast. And he's owned, and managed over 2,000 properties. And I'm going to be honest, if you guys haven't joined for one of Rod's live events, I highly recommend it. The networking, connecting, and the lessons you'll learn are phenomenal. But without further ado, let's dive into things. You ready, Rod?
Yes, sir.
You're somebody who has really dedicated your life's work to multifamily real estate. I mean, you're an investor, you're an operator, you work with passive investors, you teach people how to create a career out of this. Tell me, why multifamily?
Well, I've owned 2,000 houses, Stephen, as you know, and it took me a long time to get. Yeah, we talked about this on my show where, you got the memo faster than I did. Okay. So, I've had 2,000 houses I rented long-term. In 2008, I had 800 houses and I had some apartment complexes and, I lost it all, lost everything. And I lost it because of the houses. And it wasn't so much that they were houses, although houses are much harder to manage. It was the fact that it was a lot of things. And let's talk about why. So Florida has no state income tax, so property taxes are higher. So that impacts what? Cash flow, right? I had properties 2 hours north of me, 2 hours south of me, all the way down the coast. So a big swath of area that I owned these houses in. And a lot of them, well, not a lot of them, some of them were in wind zones and flood zones that impact insurance costs, which impacts what? Cash flow. But what really killed me was if I sent a maintenance guy to one of my apartment complexes, everything's the same. The plumbing parts are the same, appliance parts are the same, locks, it's so we could stockpile parts and they could get in and out in an hour. Well, if I had to send someone to one of my 800 houses, could be an hour or hour and a half each way. Then they have to go see what's there because every house is different. And then they've got to go find a Home Depot or a Lowe's, which could be another hour round trip. And I don't know about you, Stephen, but anytime I try to fix something, I usually end up going to Home Depot or Lowe's more than once. And really what took an hour at one of my apartment complexes would take all day at one of my 800 houses. Now, these were C-class houses. And we all know, C-class properties have a lot more maintenance than A and B for a lot of reasons. The tenant demographic, the age of the property, so on and so forth. And so that really killed me. But then the final straw, and I lost $50 million in 2008, if you haven't heard my story before. And And the final straw was that most of my tenants were contractors, plumbers, electricians, drywallers, painters, roofers, which fell off a freaking cliff in 2009. And so, it was just like the perfect storm. And you know what's crazy is I was only at a 30% loan to value. I only owed 30 cents on the dollar, and I still crashed and burned, because it's never about that. It's about cash flow. And so why do I love multifamily? Because throughout that crash, my multifamily did just fine. It pulled back about 11%, but it would have easily survived. And again, it was a single family. I thought in my infinite wisdom that I'd save 50 basis points, which is 0.5% interest or so, combining packages of houses with my multifamily. And if I hadn't combined them, I cross-collateralized. If I hadn't done that, I'd still have the apartment complexes. So that when I recovered from all that, that's why I started my podcast, was to give people that message that if you're going to buy and hold, for God's sakes, do multifamily, don't do single family, because of all the reasons that I just outlined. And, now, of course, I pay attention to demographics. Like an example, we just, bought a 280 unit in Cincinnati not long ago. And I literally line by line looked where every tenant worked just to gauge the COVID impact of COVID on that particular type of business. Like there were a lot of people that worked at Delta, which would be impacted. Now we're killing it with that asset, but that's that's what the lesson I got from, the demographical component of the crash. So
as somebody who's went through a scenario where you lost $50 million, you lost 800 houses, you went through this big thing, and a lot of it was connected to those single family homes.
Primarily that. The multifamily would have been just fine. And had I just been in multi, I would have survived easily, bud. Easily. Yeah. Yeah, absolutely. So you came out of there and you were ready to keep going. I mean, what kept you in the real estate space after going through such a huge loss? I know so many people who were at the top of their game and they left real estate as fast as they could once they lost it all. What kept you in the game? Yeah, no, I actually stepped out of the game for a little bit. I wish I hadn't. That was one of the biggest mistakes that I ever made, because if I'd have stayed in the game in 09 and 10 instead of hiding under a rock for a few months, I'd be on the back of my yacht right now. Okay, because there were unbelievable opportunities. If you listen to my podcast, you'll start to hear a pattern with the people that have thousands of doors. Most of them started in 9, 10, 11, and 12. That's a clue. Right. And so, I actually started a litigation support company right after I lost everything. I was helping people save their homes. And it was, we helped thousands of families save their homes. It was a unique business model. I didn't like it because nobody's happy when they're losing their home. And I sold that business a couple of years ago. But at one time it was, $10 million company with 60 employees. And, we helped a lot of people, even though I didn't like the business, like I said. But, then when I realized I was getting back into real estate, I hate asking for money. So that was one of the reasons I started the podcast. The other reason was I just wanted to add value and tell people, if you're going to buy and hold, for God's sakes, do multifamily. Here's why. And, I really, it's kind of funny. You want to make God laugh. You tell him your plans. I never planned to do anything with the podcast. I never planned to teach. No way. I mean, I just want to buy real estate. And then, I hit 1 million downloads. I'm like, okay, knucklehead, you probably better do something with this. So I wrote a book. I gave away 20,000 copies. But the point is, I'm kind of a reluctant coach, as it were, at least initially. Now I freaking love it. I get love 10 times a day, DMs, emails, cards. I've got a wall behind me. You can't see it if you're listening, but hundreds of thank you cards, and the whole wall behind my green screen covered with them from, people whose lives have been impacted by my work. And so I'm addicted now. My wife puts up with me working Sundays and late nights because I just love this business.
You're hooked in because you're making such a big impact, because you found something that really fills you up, and it happens to be in an industry that can really make a huge change for people in their life. And I know, you work with a lot of people on the active side. You're training, you're coaching, you're teaching people on the passive investing side as well. So I'm curious, for passive investors, what's the biggest mistake that you see new investors making when they're getting started?
Well, I will tell you that I suppose the biggest is aligning with the wrong operator. And so, there are a lot of operators that are fairly new to this business, and they haven't gone through a downturn. They they're not conservative right now. I mean, I believe we're going to have a contraction at some point here. Not something to fear, just be something to be aware of. And we'll get into what we call best and final, where they're asking for the top offers that a person's willing to give on a particular asset. And we are scratching our freaking heads when we see what some of these properties are trading for. And so I think it's not asking the right questions. It's not, really not checking out a GP. I've got this free resource I give about questions you should ask a general partner in a syndication before investing. But, like what's their experience? Does anyone on the team have construction experience? What's their target market? What's their investment criteria? How do they stress test a deal? What's their business plan? Ask about the financing. And by the way, and we talked about this before. I believe if you're going to invest in anything, you should understand it. But you got to ask the questions of the GP. Who's going to manage the renovation? Have they ever done that before? How you're going to mitigate any conflicts of interest, if any? When do you issue K1s? When have they worked with that third-party property manager before? So, I mean, just a whole list of questions. Have you done a background check on the partners? Have they ever had a deal go sideways? What happened? What did they do? Of course, what's the preferred return? What are the splits? Things like that. And, there you go. Are you investing money in the deal? What are the operating reserves right now? I mean, we stress test a deal right now. I won't buy a deal unless it breaks even at 25% vacant day one. And then once we've pulled the money out, with a refinance down the road in 3 to 5 years, it has to break even at 35%. Those are one of our basic metrics. Plus, we're putting quite a bit of money in operating reserves. That Cincinnati asset, I think we have $1.5 million sitting there just in case what hits the fan fund. And again, hit me once, shame on you. Hit me twice, it's my own damn fault. So you're not going to hit me again as it relates to being ready for a potential downturn.
And so these investors, what I'm really hearing from you is they really need to get educated enough to understand what a good deal looks like. But even more so than the deal is really understanding who is the operator, who is that person who is executing, who is doing the due diligence, who is making those decisions. And that's the reason why you have these questions. So when you get on the phone with your investor relations or that team, you're able to ask these questions to truly understand, well, what is it that we're doing here? What is your business plan? What is your strategy? What is your experience? And making sure that that actually aligns with what you understand is best practice and that they're going to be able to move forward.
You have to know the questions to ask. Okay. And that's why, that 2 days is frankly minimal education. But if you've got $100,000 that you worked your butt off to save, for God's sake, spend a couple days with me and make sure you understand what it is you're doing. That's or whatever, go do it on YouTube University, but study this a little bit because, so many people, they'll just blindly give their money to someone. And that, with our investors, I take the time to educate them. They come help with due diligence. They come behind the scenes. And, I do a lot of education with the investors that come into my deals. But, regardless, there are a lot of great operators out there. You're a great operator, Stephen. And it really is just, checking out who you're going to work with, seeing how well aligned you are, making sure it's a fit, on a personality level as well. I will tell you, and I tell my coaching students that are going to be operators, if you find an investor that's a bit of an ass, just trust me, move on. Life is too freaking short because you're in bed with them for 4 or 5 years. And it's the same on the reverse. If you find an operator that just doesn't feel quite right, for God's sakes, don't invest with them because you're in bed with them for a while. And so, pay attention to that and trust it. The other thing I will say, this is going to sound a little foo-foo ethereal, but trust your gut. As human beings, we've got this incredible brain that subconsciously sees things that we don't really even perceive consciously. And so you might meet with someone or talk to someone, and if it just doesn't feel right, trust it, because your brain sees these little micro nuances, facial expressions, movements, things that you don't consciously perceive, but your brain does. There's a good book about this. I think it's Tipping Point. Malcolm Gladwell's book about how, a art expert can look at a painting and not know why it's a fraud, but know it's a fraud. And your brain is that powerful. So you gotta trust it. It's called intuition. Women have it better than men. That's not a sexist comment. You shoot me for that, but it's the truth, bottom line. But you got to trust it. So anyway.
Yeah, well, it's super important to be able to know enough to ask the right questions and know if those answers end up feeling right. I'm a big believer in trust the gut. And, we've passed both on partners as well as on investors as well, because people didn't have the right vibe. And so what I'm curious is, you have somebody who has partnered with a lot of people, both in various different businesses. I'm curious, what impact have partners had on the development of your business?
Well, listen, I call my failures seminars. You know this, Stephen, but your audience might not. I've built 24 businesses. Several have been worth tens of millions of dollars. Many have been spectacular flaming seminars. Okay. And of course we grow and we learn from these experiences. And I've had partnerships that have gone fantastic and some that haven't. I'm going to tell you that partnerships are easy to get into, but they're hard to get out of, just like a marriage. Okay. And I've got a book about this topic. It's about the questions you should ask before forming a partnership. These are free resources you can get on my website. But the point is you've got to ask all the right questions up front, because again, it's easy to get into, hard to get out of, like a marriage. And you know about my multifamily boardroom mastermind. I've got I think it's probably the largest out there, 14 billion in assets. And I can think of two, a male and a female, big hitters, like 4,000 plus doors that just, blew out partnerships because they didn't ask the hard questions up front. And I'm in a new partnership right now with an awesome guy. And we literally went through this resource and went, what are you looking for in a partner? Have you had a partner before? What's your goal? How many hours are you going to put to this? I'm just going through some of these questions. How would you handle a crisis? What motivates you? What happens if one of us dies, gets sick, whatever? What do you feel? How do you feel about culture? How do you want this business to look in 5 years? And so on and so forth. And these are the kinds of questions you need to ask before you get in, because it's easy to get caught up in the emotion and the excitement of doing business together. But again, it's not something you go into blindly. And but I love it. Listen, our business, Stephen, it's a team sport, and I will tell you. It's just so important that you align with the right people for a lot of different pieces. And like what I see most commonly as far as the teams, as it relates to multifamily, on the operator side, if we're talking operators here, not passive, we're talking operators, is a combination of an analytical person with an outgoing person. That's an incredible combination. I had some young guys. You're young, but I'd like 3 guys in their 20s on my show. I forgot. I think we called it Young Rock Stars or something. And there was about 100 million they're at 100 million in assets now. But every one of them was just that, a partnership between an analytical person and an outgoing person. That's my partnership. I see that all the time in this business. But this is a team sport, and so it's going to involve partnerships. You want to go fast, go alone. You want to, what's the other way? Go long, that Chinese proverb. If you want to go far, go together, or something like that. But multifamily, yes, you can do single family flipping, wholesaling by yourself. You're not going to get very far in multifamily by yourself.
You just won't. And I think you underline some really important points, right? Is you can't just rush in and think, hey, partnership equals solution to all my problems. It might end up being the solution, but getting into the wrong partnership will just create a whole new set of problems. And so just like you're not going to rush out and get married on the first date, you got to get to know somebody from that perspective of, are they the right fit? Do they have the right values? Are they going in the same direction? Are they have the same work ethic? What is this alignment? How are we going to decide how this is going to work if we end up getting out of this? So I think all very, very powerful things.
Well, let me add one thing. It's critical that you play to your strengths and you align, hire a partner for your weaknesses. Because when you have that and you're both playing to your strengths, you're both doing what you love, success is inevitable. Okay. And that's so critical as it relates to partnerships.
That's such a good point, really, because when people are aligned doing the things that they enjoy the most, that's what life's all about. So, we talk a lot, or you've talked a lot about, the biggest challenge that you dealt with. But since you lost all that capital, since you lost all that money and you restarted your business, you've been operating, you've been driving forward, you've had a lot of success. What is one of the biggest challenges that you've experienced since that challenge? I'd love to hear a little bit about that.
Sure. I'll answer that in a second, but I want to say something else. We talked about partnership. I also don't want to lose sight of something else, and that is surrounding yourself with people that want what you want, and being around an empowering group. Be it a mastermind or a meetup group or a real estate investor club. I mean, I've got my Warrior mentorship program, and I mentioned to you previously, they now own 45,000 plus doors, and I've only been teaching 3.5 years, which just blows my mind. And it's because they're helping each other and lifting each other up. That's why I started my mastermind. I want to be around people that think what I think is hard is easy. And so you want to be around, so surround yourself with people like that, because that's how you're going to go far. If you're around people that are afraid of your success, afraid of potential success, jealous, whatever, you're not going to get very far. So I want to throw that out there. So what's been my biggest challenge since I lost $50 million? It's people. It's probably the hardest part of building any business is certainly systemization and KPIs and setting up your systems and procedures is one piece. The rest of every business is nothing but people and systems. And so, it's finding the right people. I've got an incredible team in my thought leadership, about 12 people, maybe 15 people, bringing someone new on today. I just interviewed this morning. I love, but it's so, you have to be so selective and so careful. And, I've created this list of interview questions that I ask. It's like literally 40 pages so I can select what I'm thinking, just to try to trigger, insights into somebody, who they really are, what they're about. And there's tons of literature on hiring and interviewing everything, but it's always people. Because if you find people that are motivated, have the work ethic, regardless of their technical ability, they're passionate about what they do, you put them in a seat that they love doing, man, I mean, that's how the world's billionaires come about, is by that people selection process. So that's been my biggest challenge. That's something I work on. I used to try to save money there. That's a huge mistake. Pay as much as it takes and then some to get the right people. We learn as we go. It took me a while to get that memo, but that's I think is the biggest challenge that I've had.
Where are you finding these people now that you're working on overcoming that challenge? Because I hear all business owners are saying the exact same thing. I've experienced it myself. It's probably the biggest limitation is finding those people and being able to have leadership for them.
Yeah, I have an asset right now that's challenged in Louisiana. It's a real problem, and the current political administration, continuing to fund unemployment with additional money is not helping. Because I had 10 resumes for maintenance. I texted all 10 and not a single one got back to me. It's like, come on, seriously? Why are you even sending your resume if you're not going to work? Yeah. And I'm going to tell you, you think it's running an ad and it's not. You're going to find the best people through referrals. And so you want to ask everybody, who do you know? And one thing that I'm going to start doing, I think, is actually proactively going on LinkedIn and looking for the different titles in the areas that I'm looking for, and just reaching out and saying, hey, do you know anybody that might be interested in work, and hoping that they might be interested if I like their profile. I was thinking about doing that because the ads just don't work. But we're in an unusual employment market right now because, again, people can stay at home making more money than they do working. It's just ludicrous.
It is a crazy world for sure. And I think it just goes to show, like, at the end of the day, when you're growing a business, it's all about people. It's the same as passive investor. You got to choose the right people. As a partner, you got to choose the right people. And it all comes down to, where are you going to find people? How are you going to know that they're right? And having enough education to be able to tell that they're the right fit. I think that's absolutely huge. And, a big way to do that obviously comes down to having the right people around you, having the right mentors, the right advisors. And so I'm curious, where do you go to find great mentors?
Well, I could show you a picture. I should show it to you. Do you put these on YouTube as well?
We sure do. Yeah.
Yeah. I'll show you a quick picture of just, I will tell you that, I'm a huge proponent. If you give me the ability to share my screen, I'll share a picture, and I'll describe it as soon as I find it here. But I'm a huge proponent in surrounding myself with people that have what I want, that are in an environment that know, again, more than I know. And So there's the picture. There's me with some of the hundreds of lanyards from events that I've gone to, masterminds that I've gone to, boot camps that I've gone to. I remember my son asking me, and of course I'm snuck in the Bentley and the Benz behind there to try to be a little show off. But anyway, I'm a big proponent in surrounding myself with the smartest people I can find. I want to be the dumbest person in the room, frankly. And so, that's why I formed my mastermind. I had 16 guys here, or 16 men and women, come to my compound here in Florida. And it was about $1 billion in assets. And I was just so blown away by the value that I got. And they were all blown away as well. They all signed up to join. Now we've got 14 billion in there. And so, where do you find great mentors? Well, listen, books, of course, and just connecting in groups. These masterminds are extraordinary. In fact, what's interesting is the guy that I'm probably going to hire on my team, high level, this is six digit guy. I met him at a Digital Marketers War Room, which is a high level mastermind of the best digital marketers on the planet. That's how I met this guy. And we stayed in touch, and he needs some stability, and he's perfect for my organization right now. And it's like, again, through a relationship. So, get connected, be proactive. And I interviewed a guy on my show that was like the ultimate huge, God, now I'm drawing a blank on his name. He's got a huge podcast, like 11 million a month, but he's all about networking. Oh God, what was his name? I'm drawing a blank. Anyway, but he every day he proactively networks with, for about an hour, and that's what he does every day. And he's had huge people on his pod. Well, obviously 11 million downloads a month. I'm excited about my 11 million total. He's had that a month. So,
let me ask you this, Rod, right? You're somebody who has succeeded at a high level. And I'm a big believer that everybody has a superpower. Everyone has kind of this ability that is their unique ability. And I really love this concept, because once somebody understands where they are the strongest, then they can really understand how they can be of value and service to other people. So I'm curious, Rod, what's your superpower?
No, and let me expand on that before I answer. Some of my most successful students, successful warriors, find that niche, find that superpower, and they bring that to a successful team, whether it's raising equity, whether it's after you close on the asset management, they've got project management experience. Maybe it's relationship building, going out there and building relationships with brokers. Maybe it's finding deals. So I love the question, because that is a secret to success in this business, and the multifamily as an operator business is figuring out what that is. In fact, when I at my live events, I don't know if you remember this, I'll make people get up, and some of them are just scared shitless when I do this. I say, get up, get in a group with 5 people and introduce yourself. And of course, the introvert's like freaking out. And then I say, tell them what your superpower is. What are you really good at? I don't care if it's fishing. Tell them what it is, and then obviously think about what it might be for this business. And but anyway, mine. I used to be an introvert too, which is kind of astounding, but I think my superpower is my ability to take the complex and make it more simple. I think, and that's partly why I get my butt kicked. You got a 5-star review on your iTunes. I've got a 4.5, because these analytical ones, if I interrupt somebody, they hate it. And so, but I'll stop an interview and I'll say, hey, stop. Let me just explain what you just said, and kind of deconstruct it a little bit and explain it. And I think that's probably one of my superpowers, is that ability to communicate effectively. I'm very well read. I didn't go to college, but I'm better read than just about anybody I know. I've got thousands of books in my library, and I love reading. And so not only does that enhance that ability to communicate, but it, of course, improves my vocabulary. So I'm able to be more articulate when I'm expressing an idea or a thought. So that's probably it. Yeah.
Well, I think we've got so much in common, Rod, along the way. That's definitely one of my unique abilities as well. I'm curious, we've dove into a lot of great topics here today. We've talked about, partnership. We've talked about some of the biggest mistakes. What advice would you have to somebody, something that you haven't shared yet, to wrap things up? What advice would you have to somebody who's looking to get started, to start taking some steps to making commercial real estate and multifamily, the next step for them, so they can really start making that kind of cash flow that we're all after?
Yeah, sure. Well, the number one thing is you've got to find your burning desire or manifest your burning desire. So you've got to do your goals and your whys. That's the first thing we do at my boot camps. You know, people are like, oh, come on, let's get into the real estate. No, we spend an hour on figuring out what it is you want and why you want it. Because how the hell are you ever going to get it if you don't know what it is, right? So that's number one. Then you've got to make a decision. And the Latin root for the word decision means to cut off. It means it's done. It's not a 1 foot in, 1 foot out sort of thing. And then you've got to push through those fears or limiting beliefs and actually, take action with it. And what's funny is action mitigates that fear. And once you take that first step, like Dr. Martin Luther King said, that the next step will be revealed. Okay. So you've got to take that first step. Manage your focus. And I know this is in your 5 success principles because focus is power. Play to your strengths. Don't try to build your weaknesses. Focus on your strengths. Hire, partner, or align for your weaknesses. Make sure you're doing what you love, because when you're doing what you love, you'll be inspired and you'll be able to inspire other people with your passion. Okay, so make sure you're doing what you love. If you don't love this real estate business and you can't learn to love it, you can learn to love things, by the way. You associate pleasure with them. But if you can't learn to love it, for God's sakes, go do something else. And then be around the right people that want what it is you want, that aren't afraid of success, that'll push you and motivate you and empower you, and then just don't give up. Have tenacity, have grit, persistence, determination. There's a book called 3 Feet from the Goal. Just don't give up. When that business I was telling you about that I started after I lost everything, that litigation support company, almost went bankrupt in December of 2010. And I innovated, I pivoted, I came up with a new idea. Like I said, turned it into a $10 million company, 60 employees. But if I'd given up, it would have been over. And then lastly, I would say incorporate gratitude and incorporate contribution into your life in some fashion. I had an epiphany when I built this $8 million house on the beach, worked for it for 20 years. 2 months after I moved in, I got depressed. And I realized I've been totally focused on me, trying to prove to the world I was good enough. And so I started feeding families. I've now fed 100,000 children, done tens of thousands of backpacks filled with school supplies to kids, done tens of thousands of teddy bears to local police departments for their officers to keep in their vehicles. And that has given my life fulfillment. Tony Robbins calls it the science of achievement versus the art of fulfillment. I'd achieved, but I was unfulfilled. So incorporate contribution. Because I know if you're listening to Steve, you might have blood dripping from your teeth here, and you want this so freaking bad for whatever your reason is. But contribute now. Don't wait. Figure something you're passionate about, children, your environment, animals, the elderly. I don't care what it is, and give something to that, because your success will come faster and you'll be happier. We've been taught to achieve, to be happy, achieve to be happy. If you give back a little bit, even a little bit, just of your time, for instance, you'll be happily achieving. I'll leave it at that.
Well, I think that's a beautiful way to leave it off. It was such a pleasure diving in with you again, Rod. It's great to hear the passion, the excitement, and it's such a reminder to everybody to figure out what you're going after, why that's important, and start bringing that passion to your life every day. Thank you guys so much for listening, and definitely check out Lifetime Cashflow with Rod, and we'll see you guys on the next episode. Thank you for joining for another incredible episode of The Investor Mindset. It's such a joy to be able to share these beliefs, these thoughts, these ways of living with each and every one of you guys, because I just know the power that it can make. And for some of you, for the select few of those people who are truly committed to going after their goals, the people who really believe that there's another level from where they're operating right now, the people who are ready to make change happen rapidly. And even if you're somebody who is stuck, who knows what you need to do, you know exactly the strategy, but for some reason you're not doing it. For those people, there's another option. There's another level that you can reach. And what I've noticed after coaching tons and tons of people through this process is that there's a simple formula. And when you can start to understand how to unlock those pieces within yourself, you'll start to feel more vibrant. You'll start to feel more energized. You'll start to make more money, and you'll start to enjoy the process through and through. So if you're somebody who's in a position, you're ready to make change happen, you're ready to invest in yourself, you really believe that the best investment, the truest ROI is investing in yourself, because it continues to give back over and over again. then I invite you to schedule a call, share a little bit about yourself, and see how we might be able to help serve you with the investor mindset coaching. You can head right over to investormindset.com/discovery, set up a call, and if there's an opportunity to serve, I'll be right there with you. Thank you for listening to the Investor Mindset Podcast. If you like what you heard, make sure to rate, review, subscribe, and share with a friend. Head over to theinvestormindset.com to join the Insider Club, where we share tools and strategies from the top investors and entrepreneurs on how to take it to the next level.